Just wanted to do a recap at the end of the day here, go over some positions that we didn't get to really touch on this morning. Let me close that. So why don't we go over some individual stock names? I mean, I hit on a lot of the currencies in the room today, so let's just go over some of these longer term positions I had questions about today. I think the market's setting up for some pretty good moves in some specific areas. So like today, what was moving for me? Let's see. So CIBC, I guess I'll just flip back and forth between long names and short names, but CIBC, ticker's a CM. This is one of our favorite short names. So again, we like being short the financials. With growth slowing, like being long things that look like bonds, utilities, with the exception of high yield. So, I've been trading a core long position in 30s all year, and then utilities has been one of our biggest gainers also. But on the reverse, on the short side, anytime we get a pop in the banks, whether it be Europe or even in the U.S., or in this example, Canada, I like taking a look at, I like shorting these on rallies. So if you do a top down on CIBC, okay, it wasn't pretty much an uptrend. It actually looks just like the price of oil. If you were to overlap a longer term chart of oil, it looks very similar, which makes a lot of sense for a Canadian bank. But this trend changed really at the beginning of 2015. You really needed to hold this lower band. You couldn't do it. And this is the level that I've really been trying to stay core short from up here around 80.5, 82 to 85. So then if you move down to the weekly level, you can see that here's the 200, here's pi. So price is really struggling. As long as we're below 85, that's where my risk is. I like playing it from the short side. And then if we zoom in on the daily level, here's your 30-day. It's moving lower. It's descending. Right? This bounce off the lows in February actually flipped positive from a wave formation. Higher low, higher low, higher low, higher low, higher low. But now this is starting to move back negative. Just similar, very similar to the price of oil, right? So oil is making lower lows on the intermediate term basis, and now CIBC is doing the same thing. So any bounce in oil, you can take a look at CIBC on the short side. And then if you want to look at the overall financials, I think XLF and FAS, that was another one that was moving pretty good for me today. I think this is due to roll over. I mean, we're back here at pi. It's the right location to be short. Call it a double top here. You can really even kind of look at it as a head and shoulders pattern, even though the neckline's just a mess. But so I'm fine with playing this on the short side, even all the way back to the highs from last year. So I want to stay with that. I think as soon as this cracks, we can be back down to 24. There's enough shocks in the financial system or the finance sector to be had in the back half of the year that we should probably get some more moves down into 2022. I like it. The retailer short. We're consumer late cycle, so XRT is a good name to short. When the market gets to levels like we are right now, you can see it's back up at pi. This line matters here, this dash line. So you're probably going to get lower high in XRT. I didn't sell any more today. I should have, but we can do some more with that tomorrow. There's really no rush, but you want to be a seller between 45, 46. Chipotle we bought going in front of earnings. This is one of our newer names in our preferred portfolio, so I think we can get a move back into 475, 494. All the lower highs from earlier in the year in February is around 5.25. So you can still, if you weren't in 2 or 3 days ago, like we were, you can buy this with your risk below this candle low, or even play it with the risk below 384. And then again, I think you can get a move up here into 200, back here into pi. I did some longer term analysis last week that, you don't want to get too wrapped up in all the headlines, because the whole food scare with Chipotle was just the reason for the stock to pull back and give you a longer term buying opportunity. So any pullback deep within these bands, you can see it on the monthly chart. That was a buy back in 2012. It's another buy right now down here in front of 400. And so that was my call. I mean, our call last year was once you broke these higher lows, you could get a move back to pi, and then we were a buyer. We started scaling in all the way down here. I blogged about that, and it's still more of the same. It's trying to find a base down here in front of 400, and I think it's got a pretty good chance to hold and turn back up. So we'll keep working a longer term core position on Chipotle, and then if you get back above 450, you can see there's a lot of room back to 588. That's about halfway of the move down from the highs last year. It's the 30-month moving average there, 588. So that's kind of my longer term target. It's more than 3 to 1 there. If you risk one monthly candle, or even if you take the risk from the lows down here at 384, you're risking this amount for a move back into 600, 700, and then we'll trade around this position on the intermediate term basis, so you can compound your results even more. But that's the game plan on Chipotle. I've kind of been stocking Valero, VLO. It's pretty, it's not going anywhere. It has zero momentum, but longer term, it's at the right location where it can probably go back. It can go back to 60, 65 long term, no problem. So I have a small position there. I haven't really added to it yet. I'm just kind of watching that. Let's see, ERX. This is how we're playing oil longer term, just because I like the decay in the ETF. I mean, I'm short futures right now, but I'm trading oil futures more from an intermediate term basis. I think this ERX is a good way to do it longer term. This is the bull 3 times leveraged oil ETF. So as oil moves back lower, you're going to get added benefit of being with the decay built into these leverage ETFs, the roll, cost to carry, whatever you want to call it. But this should move a lot lower. I think this can get cut in half. So we were sellers in here. I'm still short. I think this can go back to 20 pretty easily, even 15. You could even make new lower lows if oil moves back in the low 30s. That's ERX. I touched on Germany this morning, France, the financials. If you look at high yield, I'm still surprised that high yield hasn't cracked. Whether you're looking at JUNK for junk bonds, or you're looking at the high yield index, HYG, oil's rolling over. I would have thought that it would be under more pressure, so still might be a little early. This is getting late within the cycle. If you look at the weekly chart, if you look at the monthly chart, it's really extended. So this is a good visual right here. I mean, this wave formation rolled over along with oil. As soon as oil started to break 85, this started to roll also. And this is just clearly in a long-term downtrend. So you had a really nasty move all of last year that exhausted its move in February. Now you bounced back about 50% of the way. You can see that. So I think it's probably going to fail up here around the 618. We're already past the 50% retrace. So it's the right location for this to start to go the other way. And then if we move down to the weekly level, you can see more of the same. This was the old lower high around 86, and the market's checking up right there. It just hasn't taken out any of these prior weekly lows yet. Once that happens, you can get a move back to this 30-week pretty easily down at 82. And then from there, we can see if, it's going to depend on a lot of other factors, whether you get a move back down to the lows from this year, 75, 74. So I'm still hanging out short there. I'm waiting to add to it. Treasuries, I'm trying to think what other bond markets you want to do. I covered treasuries this morning. We had a nice pop. I put that in the room. It was a nice morning for us on the long bond. Potash is still going sideways. It's yet to break out, but I think this next move is higher, 22 to 25 longer term. Google I've covered quite a bit. We pretty much bought the low there with the pi cycle in June. Now you're pretty extended. If you slap a Bollinger Band on top of here, it's just overbought. Anything up around 775. So we're still core long this name forever, pretty much. And then but you need to get us back down around 725 to 700 before we want to get back adding to longs on Google. Wisdom Tree, I don't know what its problem is. I'm still waiting for this one to roll back over also. It just got crushed last month, and then along with Brexit, made new lower lows and then just ripped back to pi here. But I expect this was going to fail somewhere around this area. We're at pi on the 4-hour, the daily chart. I mean, it still has room to maybe get back to 13, 14. The fundamental work on this one probably puts this Wisdom Tree there, this stock around 5 or 6. You can see the divergence on the cycle here, the stochastic rolling over. Weekly levels overbought. It's not overbought. It's high within the cycle. The price is what makes it overbought or oversold. The price could be oversold and the cycle could be high. So I kind of misspoke there. It's high within the cycle on the weekly. Monthly could still have some room to bounce. But that's fine. We can trade this off the weekly level and these lower highs from here for now. I think that pretty much covers all the ETFs that we're playing. XRT, VLO, oil. Now we're getting into the futures markets. Let's just touch on the VIX real quick because it's perking up again today. If you look at the 4-hour, actually let me minimize that one. Last video kind of cut out, but I'll just finish up with vol. If we want to look at the VIX, I think it's trying to turn the corner here. This is the daily level. I've been doing a lot of teaching over the years on this, so it's been marked up, this chart, pretty much. If we go down the 4-hour, the beginning of the year I kept saying anything below 13 is a buy on the VIX, and that's been right all year. And then you get these nice moves back to 16, 20, 22. I think did we get as high as 30 earlier in the year? Yeah, 30 and all that crap going on in January and February. So from here, we started nibbling again. I guess it was the beginning of the month. And so this is how you kind of trade around the position when you're early. Don't want to plow in or just plunge in on any particular security in one shot and do it in one price. So you want to scale out your entries, whether you're buying or selling. And so there's an art to how you do that, scaling in and scaling out. It's kind of some of the things I teach my guys. But if you've just been following me on the VIX here, I don't want to buy the leverage ETFs. We want to short those for all those reasons of decay and all the issues with the leveraged inverses. So we were buying VIX calls here and then just trading it around. So what we bought well here, I took half or all of them off. I don't remember. Still long some strikes from in here. That's why they're blue. When they go, I throw green up here when I take them off. So what I bought well yesterday or last week, which was pretty much on the lows, we took some off this morning. Took half of that round of calls off. And so anything now back towards 12 or lower is a gift. You just want to keep, adding and reducing to the position. And then what I'm looking for is eventually, if stocks crack again, I mean, we can easily be back here on the VIX up around 15, 16, 17. So that's very doable. And then if we get a pop like that, that's when you want to turn around and start thinking about UVXY. So I know they had a reverse split today, which is good. I mean, I thought about getting back in the water here short, but I'll wait. I'll just want to trade it more off the VIX. When the VIX gets overbought, then I'll step in here and buy puts on this pig again. I mean, this thing, all it wants to do is go to zero over its lifetime. So I was kind of tempted to buy some today, but let's just wait. We'll try to get puts on this closer to, I don't know, it looks good now. It's kind of distorted, obviously, when it splits like this, but let's just be patient on it. Let it come to us, and we'll just trade it off the VIX. The VIX is pretty low, so I don't want to get caught reshorting this too early or buying puts too early on it. Now the right level is probably up around 60, 70. But again, we'll just play the VIX. So I want the VIX closer to 15, 16 before I think about going the other way short. Alright, I mean, stocks, S&Ps are up 20 days in a row without being able to take out the prior day's low. And even today we couldn't do it. So can this roll over? Yes. Is the probabilities that it rolls over? Yes. But anything can happen. So we could just slide sideways also and then make another FU move to higher highs and really squeeze the shorts. So just stay patient on. I mean, it's been tough to short stocks with any real meaningful follow through. You get a little bit of a move in Brexit. We cleaned up well here, and then I started reshorting in here, and I have some puts below the market, and it's just a tough thing to fade the S&Ps. I'd rather, when we get high within the range in stocks, to go to our favorite short names like the financials, the high yield market, Wisdom Tree. I don't know how many, all these different names. Or buying the long bond, buying XLU. If we look at utilities real quick, so we bought some well in here last week, sold some out this morning. I think I put that in the rumor on the socials. And just keep doing more of the same. When utilities get knocked down, you add to your core position. When they get overbought to the top of the risk range, you want to take some off. And then I like playing in financials against that, and XRT, short retail, against that also. GM's another one I added to today. I think the subprime market, as far as auto loans, is setting up to be a real problem. And we're just late cycle consumer, so the global business cycle peaked in September, October of 2015. The jobs data peaked, I think, in July in rate of change terms, and now you're going to see more of the same play out. The next part of the cycle is that for jobless claims and the jobs data to start to break out. The credit cycle is already starting to pick up. There were some headlines today on, I think, Santander. I'm not really familiar with that company, but just the defaults around the auto loans that's probably going to be a real problem in this next credit cycle. So we've been playing puts on GM. I put on a put ratio. I don't know what's happened today. I got cut off twice, so I don't know what the deal is. But I'm getting some practice splicing or whatever you call combining the videos. So I'll get better as I go along here with this. Sharing video like this is kind of new, a new thing we're doing. So I got a lot to learn on the publishing and I don't know, putting all this crap together. What I was saying on GM, this is where we initially put on a put ratio back spread. So the way that works is it's a strategy where you have limited downside and infinity upside, but we're playing puts, so in theory you have, if this thing goes to zero, you have the potential to make all that amount of reward. Obviously that's not realistic for GM to go to zero, and we don't care about capturing all that anyway. But the way you can look it up, teaching on the put ratio back spreads is one of the best strategies there is for trading options, and I use it probably 80% of the time when I want to express a view or put a position on. And I teach a lot of that in my options seminars or in my training courses. So I don't want to spend a lot of time touching on that. But essentially what you're doing is you're buying puts, the lower the out of the money strike, or just the lower leg of the spread. You're going to buy 2 times or 3 to 2 times the amount of puts that you are going to sell above. So in this case, let's just say you buy 20, 31 strike puts, right? If you buy 20, what you would end up doing is selling a higher put strike up here and sell half the amount of what you're long. Because what that does is as long as you're long 20 here and short 10 here, if the market gaps up $40, all my 20 puts would go to zero, and I'm going to lose whatever the credit is on these short puts. All right, but the point is that you're long twice the amount of what you're short, so it's not a naked strategy. It's very conservative. It's kind of hard to explain verbally. You'd have to get into some slides to kind of explain it easier, but you can look up on the internet ratio back spreads if you want to learn more about them. So I put that strategy on here, and then as we got a further move through earnings, I covered the short side of my puts, so I made money here. That's what this green line is representing. And then that when I take off the short side of these puts, that's increasing my delta, or my overall short position. So I'm actually increasing my short exposure as we moved higher. All right, and then today we bought some SEP 32 puts, and we'll see if we're just going to trade that around. I think long term we're going to probably get another failure here, up here, lower high on the weekly level. If you ask me where am I wrong, it's above 34. That I'd probably cut my risk and maybe look to reestablish a short up here towards the highs from last year. But overall, if you want to draw a downward regression channel here, you can see that this is the trend longer term, or not. So that's the downtrend we're in. You really want to be short up in this area. Again, it's not so much where you're short from as how you're short, how you work your position. That's one of the arts that most of the amateurs and novices don't have a clue on how to do. That's why they're in and out, getting stopped up and chopping themselves up, because they don't know how to stick with a position. Sometimes you have to cut your risk and reestablish higher. Sometimes that's essentially stopping out. Sometimes I'm usually always early, so I'm wanting this to back up in my favor so I can get short at higher prices. If I get in and I only have my first 1 or 2 lots on it and it goes in my direction, it's still going to be a winner. It's just going to be a smaller winner. So we're just being patient here. I want to see how this reacts. I kind of think it's not going to be able to get above this high that it put in on its earnings, and then once it starts to take out some lows along with the rest of the market, we could see this trade a lot lower. So from here, I'll take off these 32 puts if we trade in the money tomorrow on the hourly. If we move back up here towards 33, then I'm going to look to put on another round of ratio put spreads. So that's kind of it for General Motors. I touched on a lot, and I had to do 3 videos here, so I'll just wrap it up for today. But again, if you're new, you can visit us at our website, jenkinsrm.com. You can join the chat room for free. We use a company called Slack. The guys that started Flickr came up with that. And their goal, their company is great. Their goal is to eliminate email, but it's great for chat room purposes. I mean, we can communicate on several topics, from currencies to futures to I have 2 private channels for subscribers, so that's all in there. It's on either mobile device, Apple, Android, and obviously the desktop platform works great too. So you can join there for free. We're building a good team in there, and then my Twitter handle is the Jason Jenkins. A lot of you guys have me on stock twits. I don't know what my handle is on there, but yeah, visit the site. I'm going to be sending out some information on 2 upcoming seminars I'll be doing. There's always a lot of new people that want training on options, and I do that usually in a 1-day Saturday session. I do an advanced options group as well. We'll get into more of the ratio back spreads and some vertical spreads, and kind of legging in and out of the yield curve, also kind of on the same concept as a condor. But anyway, so I'm going to be doing a beginner's option session coming up, so you can check the site for that. And then also a volatility session should be in August as well. That's one of the best strategies I have going. A lot of people don't know how to trade vol, especially when they want to trade these inverse leverage ETFs. They get totally twisted up and on the wrong side, so I teach people how to do it the right way. And those leverage ETFs are one of the best short vehicles around, so you can make a lot of money trading them the right way. So visit the site. Let's chat with you guys in the morning.